Okay, from private equity to public equity, if Jim is in the room, it's so dark. A year ago, Jim was up here just before Fly Exclusive went public. He's now been, oh, here he is, striding down, I think, the middle of the room. Jim, is that you? It is, great. I think everyone knows Fly Exclusive. We've already heard from George at Wheels Up this morning, but let's have another look at how the public markets are going. We're absolutely delighted to have Jim. Jim obviously is another veteran business aviation leader. How are you? Thanks so much. Thanks so much for joining us. So, how much fun has it been?
I don't know why everybody doesn't do it. Piece of cake, ton of fun, easy. Yeah, work part-time.
How many times a day are you checking your share price?
I try not to check it because it hasn't looked so good lately. It doesn't make me feel great to look at it. So I try not to, but probably at least once a day, maybe.
Stepping back, how is business generally?
This has been an incredibly transformational year for us. Going public was a massive undertaking, getting up to speed to be able to be a public company. I always like to say that it was a lot more challenging to take what I called hot dog stand accounting up to PCAOB standards, and that cost us a whole lot more money than what I expected it to cost. And this has been a massively transformational year, eliminating consultants and putting the right people in place. We started the year with 37 non-performing, and that's just a nice way of saying airplanes that were losing lots of money, airplanes, and so we've been eliminating those. We made a ton of progress on that. We upgraded our leadership team, and so this has probably been, without a doubt, the most challenging year of my career, going through this process and getting things where it's ready to actually be a public company. And we went public in December. I would say it probably took us half the year to get to where I would say we were actually acting like a public company.
Well, which is partly going to happen with a SPAC, because with a SPAC you sort of lose, if you'd been going for an old-fashioned IPO, it would have taken you many years and you'd have missed the window if you hadn't have gone for it last year.
At some level, I think we missed the window even with the SPAC. You were able to raise a lot more money a few years prior to us doing it. I think we were one of the few that even completed last year. So I think we were fortunate in that way, and we have some really good SPAC partners. The sponsors are in it, and they're committed to it. They're locked themselves up for 3 years in the deal. So they're not the guys that are just going to be in it 6 months and start dumping their stock. While we're a public company, we're largely a privately controlled public company. I still own 75% of the stock, and the primary investors own a little more than 20% of the stock, and so we're very, very thin public float that's there, which is not exactly a good thing. It makes it very volatile because just a few shares can move the stock in a big way. So that's a little bit challenging to manage as well, but it's been fun.
Do customers look at the stock price?
Some definitely have some looking at that, more looking at the profitability and the trajectory we're on, and how we're doing as a company, and how do we explain the transition of a year we've been in. And I think that's the transparency of being in the business, and having it as a public company where people can see it is a good and bad thing from that way. So we're one of the few and that are out there that are public, and so you can see everything we're doing, and a lot of the ways they make us account for things today with VIEs and other things either make us look good or bad, and so there's a lot of challenges that come along with that.
And to be fair to you, you had one of your biggest customers cut down what they were using. You've sorted out with the non-performing fleet. You talk about these aircraft. These are older aircraft where you just couldn't get the parts, roughly, or?
Yeah, I mean, the supply chain issues are still a big problem for us, and we did have a huge GRP customer that was over $120 million a year that we had to replace over the last 12 months. So that was a big part of it. We've now replaced all of that business at this point. We actually flew more hours this year than we did last year. I think we might actually be the second fastest growing company still in the face of that. So in the face of eliminating 37 airplanes this year, and that are non-profitable airplanes is the more accurate way of saying it. We've accomplished a lot this year.
And they were non-profitable because you just couldn't get them flying?
I think they were breaking a lot. Supply chain issues, parts are a problem, but really they just break all the time. And we had those planes that we were eliminating were sometimes running in the 30%, mid 30% dispatch availability standpoint, and you just can't make money one day out of three. You can't fly them enough to make them profitable. And so we kept fighting that and thinking that, hey, it's COVID related. Everybody in the world uses COVID as the excuse for every problem that we've all encountered. But we held on to them too long. And I think we made a huge mistake. Honestly, we should have been eliminating those airplanes a year ago. But we kept thinking that, hey, we're going to get better. We're going to get the part supply chain issues are going to go away. I won't have 12 airplanes sitting on the ground waiting for windshields to get fixed. But they just never did. And so between the airplanes breaking all the time, we just decided early in the first quarter, so we've got to get out of this. So we're never going to be able to this was the first year that we haven't made money. So it's been a big transition for us to get rid of them.
And I think no one can blame you for keeping them. When you had that high on COVID, anything could fly, even if it was only once every three, was still worth a lot of money.
Yeah, the ones that were flying when they were working were flying 100+ hours a month, and so there was lots of business for them. And you kept thinking, hey, we're going to get the parts, we're going to get the supply chain is going to normalize, we're going to be able to fix these things faster and get back to a more normal 70%, 75% dispatch availability. Those older G4s, the Challenger, the Citation 10s, and even the Encores, even though I like an Encore a lot, just didn't work for us. They were running in the 30% uptime range.
But what's interesting, it didn't work for you, and you have your own maintenance.
Exactly. So maybe that means we weren't that good in maintenance.
I don't think it
but, yeah, I think we work 24 hours a day, 7 days a week, and even with that, we still had trouble getting them returned to service fast enough to make them where they were profitable. The demand is there. It's still there today. We've got all the business in the world. It's just got to have the airplanes available. So eliminating those airplanes, just those three fleets, and replacing them, of course, the CJ3 Plus. The XLS is still a great airplane for us, and then the Challenger 350s that were added have been massively more reliable. The 350s we've added are flying 120 hours a month and never breaking. I think we've had 5 or 6 mechanicals on one of them in the last 4 months, and those are 2 and 3 hours to fix. So the customers are happier, we're happier, they make lots of money for us, and so it's a lot more fun to run a business when everybody's happy with you.
It's interesting though, because we're hearing, a lot of people are saying charter demand's gone, and you don't feel that.
I don't. I still think we get 300-400 requests a day for trips, and so planes are all over the country. I think we got as low as 88 airplanes, and we were as high as 108 or so, and I can't keep track anymore with the ones we're selling and the Volato Honda jets that we're putting on, and I don't know where we are anymore. I think we're somewhere around 100 airplanes, but it's enough to keep us busy, and we've got plenty of demand. If the airplanes are working, they're not broken, they're not in a maintenance hangar, the demand is not a problem.
Do you think that's because there's a shortage of I know you have owners, but your owners are very committed to charter.
Well,
a shortage of floating branded charter.
I'd like to think some of it's because of the vertical integration we've done, and the paint and interior and ours are in better shape. We're painting them every 3 years. I don't think there's many people doing that. And if I didn't have that vertical integration and the ability to do it more economical than anyone else in the space, I don't think I would be in as good a position as we are. So the product we're putting out there is extremely good. Even the ones when they were breaking, those Citation 10s that had brand new paint, brand new interior, they looked phenomenal. But still today, when a customer hears, hey, tomorrow your trip's in a Citation 10, compared to how they feel when I tell them it's in a Challenger 350 is night and day. You know, they're like, oh, okay, I feel good. It's actually going to show up and not break tomorrow.
Here's a great audience question. From a brokerator, which is the new term. It's for an operator broker. Jim, you're a great partner. I book your fleet 4 to 5 times a week. I'm guessing this is from Hunter, because it says Hunter needs a bonus, by the way. But please.
That's an internal person.
The next thing is brilliant. But please, Volato, what is going on? Explain.
So just for the record, and all of you investors that might be out there, we did not purchase Volato. We took over the operations, and it was as much a customer acquisition play as it was anything else. They had 400 customers, and we've been able to transition over half of those already over to a Fly Exclusive contract program, what have you. You know, they had a great list of customers. The rates were in a decent place with their what I call a club program. They called it their insider program, but it was a customer acquisition play more than anything, and it's worked out real well for us.
You were already in the fractional market, and someone's saying, are you seeing the same growth in fractional?
I'm not sure we're definitely seeing massive growth in fractional compared to, I'm trying to make sure I don't give you too much material, non-public information these days, as I'm learning what I'm allowed to say and not say. But we're definitely seeing rapid growth in the fractional. I haven't looked to see how fast NetJets and FlexJet are growing, but as a lot of people say, hey, I want to be more like them than I want to be different. Yeah, so I think they do a great job, and we're happy to be in the space competing with them.
Someone else is saying, how do you plan to reverse the trend and turn the business back to profit?
Well, I think that we've talked a lot about that already. So some of that is eliminating the non-performing fleet. It was eliminating the consultants that we had in place. There were at one point were $1.3 million a month we were spending on consultants, trying to figure out how to actually have our quarterly reports filed on time, and finish a 10K and S1s and everything else that I've had a crash course on learning how to do all right here the last year. But the trend is already there. So from a first quarter to a second quarter, I can't really tell you what third quarter looks like yet. You'll have to tune in a few days. But the trend is already there. So you can easily see from a trend standpoint, if you just look at how that line looks after I show it from the first and second quarter, since I can't talk a lot about the third, that line is headed right to where we need it to be, and I fully expect us to be profitable in the extreme near future.
If there's someone in the room thinking of going public, what advice would you give them?
Come talk to me. I'd be happy to help you. It wasn't, you know, at some level I enjoyed the challenge and the process and the you know, all the work that went into it, and it's a massive learning process. And so I've got a thirst for always continuing to learn and figure out what I don't know yet. And so I wouldn't discourage you from doing it. I think if I had to do it again today, almost 12 months later, I'd still do it again. I might have taken a little more money off the table, but I still think I'd do it again today.
Someone else is asking, what would your ideal fleet look like for the next 2 years?
Still love the CJ3 Pluses. It's a great airplane, great entry airplane for us. Very happy with the XLS as well. I'm very focused on the Challenger 350 fleet. We're adding those as fast as we can at this point. I think that'll be the fastest growing part of our fleet. There's more demand, interestingly enough, at that level of fractional than there is at the lower level of fractional. So I think we'll be very focused on adding that. At some point, maybe back into the heavy jet fleet. But whether or not we do that as a fractional, we've got to have enough of them to be able to support the fractions when we sell them to enter into that. But CJs, XLs, XLS, and Challenger 350s will be the focus.
And to be fair, you've done an amazing job of replacing 40% of your customers, turning around. And you didn't acquire Volato, but you've sort of integrated?
We took over the operations. So we took over all the customer acquisition, the operations, took over the airplanes. Those airplanes are being transitioned to the Fly Exclusive certificate as we speak. That should happen largely by the end of the year. That'll be complete. The customers are moving over to Fly Exclusive contracts. So they're now flying with us. And so it was more of a, I mean, it's an aircraft management services agreement, it's what we signed, but it was more for a transition period to bring those airplanes over to Fly Exclusive and keep them operating.
So you've sorted it out this year. 2025 is going to be boring.
I hope so.
Are you ready for another acquisition?
You know, one of our, what I like to call superpower is that we're very consolidated. We've got all of us are sitting in Kinston, North Carolina. My management team is there. The leadership team is there. We're not fragmented all over the country, and I think that's part of what made the Volato deal attractive is they didn't really have offices. It was just they were operating the business virtually, which was incredible what they accomplished doing a complete virtual business that way. But it meant to take that business over operationally. All that had to happen was point their phones to ring at a different location. And we were up and running, flying those trips the next day. And so I don't think we've missed but a trip or two since we took it over. It's been a lot of fun. But, strategically, we're not out shopping or looking for anyone to necessarily buy. What we want to do is do a terrific job with the business we've got, run it profitably, deliver well for our customers, and maintain the culture that we've got. Some of the fragmentation leads to a culture being different in different places, and I'm super proud of the team we have. The leadership team that we've restructured over this year is really incredible. What we've got in place today and the progress we've made is challenging as it has been a year for me. I'm really proud of the progress.
Brilliant. And since we've been speaking, your share price has gone down 50%. I'm joking. Thanks, Jim. That was great.
Thank you so much for having me. Thank you, guys.